Hi everyone. The live stream did not work on, as far as the chat, did not work on TradingView, so I decided to switch to YouTube. I'm going to take a moment to post a link to this YouTube live stream on social media. If you wouldn't mind doing the same, I would appreciate it. It really helps support the channel. Let's see. Let's go to YouTube. There's my stream. Let's mute. Let's copy the link. Distribution phase ends with sound phase E, which is the same time the beginning of phase A for accumulation. Yeah, we'll cover that in the live stream. We'll cover that in the live stream. What live stream? The one I'm doing now. Now let's go to Discord. This is giving time for other people to arrive before we start the analysis, by the way. I gave no heads up that I was doing this. Let's go to public chat. At everyone. We are live streaming now. Send now. Let's see where. Hey, welcome everybody. I'm going to go ahead and pop this chat out. Put it over here to the side on my other monitor. Alright, let's get OBS up over there. Kind of move it over a little bit. I don't need it blocking my chat box. Appreciate your patience here before we get started. And again, we're waiting for others to arrive. We are waiting for others to arrive. Let's also let me move that there. Let's go to Twitter home. We are doing a live stream now. // Then when I delete it, it should show the image. It will here in a minute. See there? Let's see. I cannot post it on TradingView. Don't want to get banned. I suppose I can. Brilliant. Best date ever. Okay. I'll listen to that in a minute. Well, not in a minute. It'd be probably a couple of hours at least. Of course, our Bitcoin distribution schematic. Let me get back to premium signal trade chat. Where I was asked what? Well, let me enlarge it for y'all to see it. Control plus, 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 plus. Right there. A question about the Wyckoff method. The distribution phase ends with SOW, which represents sign of weakness for those of y'all who may not be aware. All right, again, they said the distribution phase ends with a sign of weakness in phase E, which is at the same time the beginning of phase A for accumulation. That's what they're asking. Well, let me show you a chart here for that. That is a good question. For those who aren't very familiar, let me negative, 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 and move that back over to my other monitor. Ooh, I have that a little bit too big. Let me make that a little smaller. This other monitor is a different resolution than this 5K TV I'm using. Alright, let me bring the chat back up. Let's go to a chart where I have blue text bubbles identifying the phases for accumulation. On my monitor, it kind of looks like burgundy text bubbles here, identifying the phases of distribution. Note how phase E of accumulation, phase A of distribution overlap. Also note how phase A of accumulation overlaps with phase E of distribution. Phase A of accumulation, where we have our preliminary supply, selling climax, automatic rally, second test of support. We just completed phase A. Now we're going to phase B with a simple rally. Ended up being a double top. Coming down to test support again. Then we go up again, test the preliminary support range, have a pullback, and then all of a sudden, many would think a sign of strength has begun, but we don't go straight into in Wyckoff method 2.0. I'm not talking about classical Wyckoff method, I'm talking about 2.0. We do not transition from phase A all of a sudden into phase D with a sign of strength and totally skip phase B and C. No, we do not do that. We do not do that. Therefore, when we went up above preliminary support prematurely here, where you would normally say that is a sign of strength, in order to keep this aligned with Wyckoff method 2.0, we cannot call this a sign of strength. What do we call this? We call this an exponential rally. It's not a simple rally that goes up to test like we had right here when we had our second test of support. Then we came up with a simple rally in phase B. All right. Yes, we did have phase B with one test and then go straight into what many may call a sign of strength, because we busted up with authority above the preliminary support range. But my rules, you have to be highly suspicious of going straight into a sign of strength after only one simple rally. Only one simple rally in phase B. That's held high suspect. So by habit, I do not call this a sign of strength, but also this is not a simple rally. This is an exponential rally. And note, I said right here in this text bubble, what did I say right here in this text bubble? Exponential rally in two-tiered. That's what the T stands for. In a two-tiered accumulation schematic. Exponential rally in a two-tiered accumulation schematic, meaning two levels. You have to this is held high suspect. We're going to overextend in higher time frames pretty bad there. Just a moment, let me reduce this again. I think I may have had it to 16. Alright, we go up with an exponential rally that has to create two tiers. Well, here we went sideways a while before falling down with a selling climax. Automatic rally, second test of support. Simple rally, test of support. Exponential rally. When we have an exponential rally, now here's our next. This is our near-term group preliminary support range right here. This is our mid-term. MT for PSYR. That should be okay. Well, that was for distribution, but also when looking at it for accumulation, not only is this our midterm preliminary supply range, this is also our long-term preliminary support range. This is our near-term preliminary support range that we busted out of with authority. That's not a sign of strength, it's an exponential rally. When you have an exponential rally in phase B, you're highly likely to have two tiers, two levels of accumulation now. And in this case, at the moment, we're assuming, well, we had most of our accumulation here in tier 1, and tier 2 is used primarily for liquidation purposes. I know a guy on Twitter who lost 16 million shorting here. He was bound and determined, man, we're going down lower. No, was no such thing. A lot of people thought we were going down to 1,000. But when we go up with an exponential rally, that's likely to create a two-tiered accumulation schematic. And it ended up where the majority of our accumulation was in tier 2, not tier 1. We use tier 1 primarily for liquidation purposes. When I say we, I'm talking about the composite groups. They used tier 1, level 1, this lower level, tier 1, 2019 to 2021. They used it primarily for liquidation. We liquidated longs here, and we liquidated shorts here, and we liquidated longs here, then liquidated shorts again. Because each time we would come down or go out from tier 1, we did not stay there very long. The majority of our time was spent in tier 2. But this is an exponential rally in phase B, coming down with a test of the lower boundary of tier 2 before then going up again with what this time we're going to call a simple rally. It's not an exponential rally. Come up with a simple rally before in phase B before now transitioning from phase B into phase C with a Wyckoff spring, where we then sometimes you'll have a test before going up with multiple last point of support events before then finally seeing a sign of strength that eventually is followed with a backup last point of support event. Then you can transition from phase D, where our sign of strength and our backup last point of support events, both of those events are the events that occur in phase D as in delta of accumulation. Alright, then we see another sign of strength again, where we end up closing substantially higher than our next preliminary support range, where we went sideways here for a bit. We go up with another sign of strength. Then we have a pullback again. Now that is to be held suspect, or we should ask ourselves this question: Is this going to be our preliminary supply range where we went sideways here for a while? Because, you know, if this is our buying climax that's followed by an automatic reaction, followed by what? A second test of supply this time. But we went higher, so this is another sign of strength likely, and this may be our buying climax then. Alright, so if that's the case, if this is our buying climax, because at that time we don't know if we're going to keep going higher, you know, just didn't know at the time like we did back here in 2017. Alright, but when we go up, we say, hey, this may be our buying climax that should be followed up by an automatic reaction that should come down to or near at least the upper boundary of our preliminary supply range, but no lower than the lower boundary of our preliminary supply range. But, you know, we went up pretty high and came down here lower right here. We have to also say, because of how high we went generally, especially in crypto nowadays, and I also see it quite a bit in legacy markets, that we often now have two tiers or two levels of accumulation and two tiers or two levels of distribution. All right, and here we have a two-tiered, two-level distribution schematic where we had our buying climax followed by a automatic reaction followed by a what? Second test of supply, simple reaction. It's not an exponential reaction coming down into this lower tier. It's just a simple reaction followed by another test of supply followed by a simple reaction followed by a test of supply, where we then fall down with what I would call an exponential reaction, and that's ERE, exponential reaction to lower boundary of tier 1. All right, because a lot of people would think, hey, this was phase C with an upthrust after distribution, go down, followed by an LPS, then a sign of weakness. You know, a lot of people would be thinking that, but as you can see, that was not the case. We do, and by the way, this is the 3-day time frame. You would be able to tell by higher time frames in the indicators that we were not ready to go down here yet. You could tell when we were here. Looking at higher time frames now. When I say high, I'm talking about pretty high now. 4-week, 5-week, 6-week time frames. Note how we go back up again after testing the lower boundary of preliminary supply range, because you have to remember, with Wyckoff method 2.0, in order for there to be a sign of weakness, in order for it to be considered a sign of weakness, we must close substantially below the lower boundary of our preliminary supply range. We must close substantially below it. At no time have we closed substantially below it. Therefore, we have not had any sign of weakness. So the odds of this having been an upthrust after distribution followed by a last point of supply, then a sign of weakness in phase D, then a lot of people think an upthrust, high or low. Did we see an upthrust last point of supply event where that went substantially higher? No. But each time we would come down with additional simple reactions, that's what I would call them. They have to be simple reactions and not signs of weakness in phase E if you're looking at it that way. Where this was phase C, transition to phase D with a sign of weakness. Now you're looking for a transition to phase E. If you were looking at it that way, you would say, my goodness, phase E was rejected. Here we are going back up again. But if you were to look at classical Wyckoff distribution schematics, you can see in phase B where we go up with an upthrust, had a higher low, then upthrust after distribution, the distribution that was here, an upthrust after distribution event. Does not qualify for upthrust after distribution unless we have a candle close above both the buying climax and our second test of supply, and any additional test of supplies in there. It has to close up above those, and it qualified as an upthrust after distribution, where we should then go down, and it's common to have multiple last point of supply events before then finally continuing down. But this was phase B transitioning to phase C right here. Followed, we would call this at first a simple reaction. Here's LPS, then now it's exponential reaction. Why do we call it exponential instead of simple? Because we went not only through this one tier or level, but which is tier 2, we also came down into tier 1. That entire move together could be looked at as an exponential reaction. But here we come up again multiple times with a last point of supply event again before coming down with another exponential reaction where we drop down from tier 2 into tier 1. But have we closed substantially below the lower boundary of our preliminary supply range? Have we? No. Therefore, none of this is a sign of weakness. This was just another exponential reaction. We're still waiting on a sign of weakness to confirm that we have transitioned from phase C, as in Charlie, to phase D, as in Delta. And finally we got that sign of weakness in phase D now. Phase D in distribution. You see where our phase A, phase E of accumulation, sign of strength in phase D, backup last point of support before going up with multiple signs of strength. This one ended up being a buying climax. Well, phase E of accumulation ends with a buying climax. That's its final event of accumulation. That's the absolute final event in accumulation, the buying climax. But hey, if you look at Wyckoff classical schematics as well as 2.0 schematics, you also see a buying climax in phase A of distribution. But what's the first event in phase A of distribution? Preliminary supply range. That's the first event. That's why it's important to pay attention while we're going up. When we go sideways, I would not necessarily say, hey, this might be preliminary supply. I imagine it's possible to have, after we go up with a sign of strength, not only could this be preliminary supply in phase D, but possibly also a backup this could be a backup last point of supply in phase D, some may say, but also at the same time this could be a preliminary supply range in distribution before going up with a buying climax. But the odds of phase D and phase E of accumulation both occurring within this, basically the overlap, phase D and E of accumulation, no. That's not traditional Wyckoff. Some other kind of, in that case, white swan of accumulation, black swan, where that was it, go up with a buying climax and immediately come down because of some major black swan event. I could see that. That would be a rare occasion in which phase D and E both shared the same column. Let's say that shared the both same price action time period or range. But that would be rare. But we have to always hold it suspect when we go sideways while going up in accumulation. Why? Because that might be our preliminary supply range, so that when we go up, you should know that we should come back down with a automatic reaction that should come down at least to the upper boundary of our preliminary supply range here. Same thing when going down in distribution. Anytime we go sideways a bit, we have to ask ourselves, this might be preliminary support range that should be followed up with a selling climax, just like this might be our preliminary supply range in distribution that should be followed up by a buying climax instead of a selling climax. We have to look at it that way as well. But yeah, phase E and phase A, they do overlap. Phase E and phase A of distribution and accumulation, they overlap. They always overlap. But that was a good question. I imagine some others were happy to hear that that was asked, maybe. Yeah, I agree with you, DB Ryder. ADA is looking aggressively weak at the moment. Welcome, New Zealand. Hello, Holland. Oh, by the way, if y'all don't mind smashing that like button and also maybe sharing the link of the live stream to others, I would appreciate it. Helps support the channel. I'm going to go... I'll go to ADA first. Then we'll get into Bitcoin. Let's see if we had any others, because I'm wondering at the moment if Twitter might be shadow banning me at the moment. I don't know. Okay, somebody retweeted it. I appreciate that. If you're not following me on Twitter, feel free to do so. Of course, the link's in the description on YouTube. Let's go to ADA. I'm curious. $31 viewers currently. If y'all remember from my trading view publications, 30 to 23 cents, somewhere in that range. What can increase odds for another leg down was explained here. Making transition into phase E with a sign of weakness. Making a transition from phase D as in Delta into phase E as in Echo with a sign of weakness. I posted that around here when we started legging down here. I knew, especially if we closed where we went down below these wicks, that's a very good sign. We're working on a sign of weakness here. And the odds of this right here being a Wyckoff spring, that's what a lot of people are saying here. Here's our spring before we go up with a sign of, well, maybe a couple of last point of support events before then finally breaking out of preliminary support with a sign of strength. No. This is definitely looking like a sign of weakness in phase E. We had a sign of weakness in phase D as in Delta right here that should be followed by, usually, by an up thrust, higher low, up thrust last point of supply. But I did not call this an up thrust last point of supply. Instead, I've called it weak buying pressure last point of supply. For it to really be a serious up thrust last point of supply event, it needed to come up at least right up here where we went sideways for a while, close up somewhere around there, but it did not do that. It did not do that. I'm curious. Where this did that, up thrust, you know, after our sign of weakness, up thrust, higher low, then we're working on it. We had multiple up thrust here, but I did have this at one point, weak buying pressure, last point of supply, instead of up thrust last point of supply. Weak buying pressure last point of supply is what we will call it. I'll stick to my rules, my new rules for 2.0. Reason we're calling this weak buying pressure last point of supply instead of up thrust last point of supply is we did not come up here to the lower boundary where we went sideways for a while before falling down. So that was not a very serious upthrust. Last point of supply. What's an example, a decent example of us upthrust last point of supply? Where we went sideways here for a while, you know, coming down with what I would call here is an exponential reaction. It's not a sign of weakness. Excuse me. Yeah, that would be considered a sign of weakness. Upthrust, nah, Yeah, I could see that, because this is the 12-hour time frame. This is not the 3-day time frame. I say again, this is the 12-hour time frame, not the 3-day time frame. Where this here, and I need to do this again because we closed down below here. Here we close down below it. That would be considered another sign of weakness in phase E, followed by an upthrust, followed by a higher low. If you were looking at it on the 3-day time frame, we're in the 12-hour. That should be followed up by an upthrust last point of supply or weak buying pressure last point of supply. I would call that an upthrust last point of supply, coming up to where we went sideways here for quite a while. Even right here, you know, if we just came up to there, but we went higher, that's an upthrust last point of supply event. But we did not see another sign of weakness yet. We just had multiple last point of supply events before falling down with another sign of weakness in phase E. So we had 1, 2, 3 signs of weakness in phase E. I say again, in phase E in 2018, 2014, one sign of weakness in phase E, 2 signs of weakness in phase E. But again here, upthrust after our sign of weakness, upthrust, higher low, upthrust last point of supply. Yeah, I would call that, because actually this was a very strong upthrust where we came up to where we went sideways here for a while. That's a very strong upthrust, followed by a higher low, followed by an upthrust last point of supply event. All right, now back to Cardano. Sign of weakness, upthrust, higher low, weak buying pressure last point of supply. We did not quite come up here to where we went sideways. Then we came down here again, testing the lower boundary. No sign of weakness yet though, because we went up with the last point of supply, one lower high after the other. Before now, this is considered a sign of weakness. And also right now, we see that that was not a Wyckoff spring and accumulation. Now let's go to indicators to see how they would have told us this is not a Wyckoff spring and accumulation. If I go ahead and go to the super macro group, the super, not just macro, super macro group of time frames. Let me change this 16 week to the 12 week. 2 week time frame, 3 week, 4 week, 5 week, 6 week, 8 week, 10 week, 12 week. Our 5 week is getting, you see our red is already below white level 30, which means as long as it keeps staying down there, we are at risk of falling down from that red falling down from that white lower B band that's synonymous with the white level 30. Seeing how our red's below it, well, the price action is subject to fall below it. Now here's our blue line. It's a least squared moving average. Blue LSMA, I just say blue line, it's easier. The blue line, that next 5-week candle, that begins 24 days, 4 hours from now. But we're subject to get another leg down. Just like here in the 4-week, this was the 5-week. In the 4-week, our red went below white level 30 here. That means we're subject to fall down below white lower B band. What about subject to fall below the aqua lower B band? No. Because now when the blue line also gets below white level 30 along with the red, now here's the blue, now all that we're waiting on now is for the green to turn down, because if it turns down, just like the red line and the blue line are also going down below white level 30, and the yellow K line is below the magenta D line of the stochastic RSI, all of those combined, we are about to get not only stage 2 expansion down, because really we skipped that, we're going straight into stage 3 expansion down, where we get expansion of the B bands when the red and blue and green all fall below level 20 at the same time. That's stage 3. Stage 2 expansion down is when red, blue, and green all fall below white level 30. Stage 1 expansion down is when red and blue and green, now they're all below level 50 at the same time. But is that guaranteed you're going to get expansion down when that occurs? No, because you could have other time frames. In this case, it would have been higher time frames at the time, in which it just wasn't quite ready to go yet. We needed the red and blue in both the 4-week and the 5-week. Here where the blue got below level 50 along with the red. No, we're not getting stage 1 expansion down. Is skipping that. Just like here, we skipped stage 1 expansion down, but we started getting stage 2 when both the red and blue are below white level 30. We see it start opening up, and where price action is going down as the B bands open up, expand. All right, but by that time though, now it looks like it's pretty easy for stage 2 to easily transition into stage 3 expansion down, is what it's looking like currently in the 4-week time frame. Note the 2-week time frame. Let's go full screen with the 2-week. Our blue is already below white level 30. Now our red is on the verge of going below white level 30 in the 2-week. But you see, we're already getting visible sign of expansion down to potentially begin. But hey, in order for the B bands to even attempt to expand, y'all, that price action has to be pushing against the aqua lower B band to open it up, to force them to expand, open it up. So until that price action gets down here to the aqua lower B band, if we want to see them really open up, you know, it's got to push on down. Well, shoot, that'd be around 24. At 24 cents, you'll see it pretty much flat, not contracted the way it is at the moment. That's when looking at it in the 2-week time frame. It may still take a little while to get an attempted expansion. Does that mean that we cannot go down in order to create calls for the B bands to expand? No. The price action has to go down in order to create calls for these B bands to expand if we're going to get expansion in the 2-week time frame. Let's go from the super macro group to the just macro group. The 11-day time frame is not part of the macro group. It's only here for pressure races. The 11-day with the 22-day doubled, that's only there for pressure races. Right now there's not one ongoing. Because the red, when it went down below level 50, it triggered downward pressure a long time ago. That red, we have yet to get any triggering of upward pressure with this red closing above level 50 to trigger upward pressure in that 22 day, not even the 11 day, which is half of the 22. There's no pressure races going on here at the moment. It ended up where downward pressure won every single race. Then we would have transitioned from the super macro to the macro, where the red went down below level 50 here, triggering downward pressure that lasts for how long? Until the white energy comes up to level 50. Will the white energy come up to level 50 to create calls for upward pressure before the red line, that's 3 week, double the 3 week to 6 week, before the red line in the 6 week can go down below level 50 to trigger downward pressure? Because if the red line in the 6 week triggered downward pressure before the energy in the 3 week can create calls for upward pressure, then downward pressure wins. But to confirm that, go to the lowest time frame in your pressure race, 6 week and 3 week. 3 week, the 3 week was the lowest time frame at that time. I want you to go to 3 lower time frames, cutting in half each time, to see if the red and blue are below level 50 or above level 50. Well, if you would have went to lower time frames, cutting it in half, half of 3 weeks or 21 days is 10 days. Let's go to 10 days here in the midterm group. Here's the 10-day time frame. At that time, you would have saw red and blue below. That would have been right around in here. Red and blue, you would have saw them below level 50. At no time have we even had upward pressure triggered in the 10-day time frame. For quite a while, the red has remained below level 50. Not only that, in the 10-day, we see the red getting below white level 30. That blue gets below white level 30, and that green still going down or sideways. We didn't get stage 1 expansion of the B bands. In fact, they're kind of flat or contracting. Normally we would already be seeing stage 1 expansion down, but we're not getting it yet in this 10-day time frame. That could be because of the red and blue in the 20-day time frame. So let's double the 10 to the 20-day. Well, it's not because of the 20-day. Let's look at the 30-day. Let's look at the 40-day. All right, let's double that to 80 days. No, that's too much. So let's look at a 50-day. Now there's not enough data for a blue line, for a blue LSMA. If we had enough data to see it, it may be on the verge of going below level 50, which definitely increases the odds. Y'all see the red, the price mean? It's showing the price could come down below the white lower B band. White level 30 could come down to or below. But I'm just going to say within proximity. You don't just use this one time frame, the 50-day time frame, to determine your price target of where you're going down to. No, do not do that. Going back to the 10-day, we see our 9-day red and blue going below white level 30. Well, you're subject to get a drop in the price action when that occurs. Now look at the 8-day. Let's go full screen with the 8-day. Let's also increase the font size with Control Positive on this PC here a bit. Red and blue going below white level 30 here in this 8-day. That can create calls for expansion, for increased volume to the downside, for increased selling pressure. Are we going down on high volume or low volume? Well, let's have a look and see at our volume bars. Right now it's going down on low volume. That's why there's just not a whole lot of expansion. But we still have 3 days, 4 hours remaining in the current 4-day candle. 3 days, 4 hours remaining in the current 4-day candle. The next 4-day, excuse me, this is 8-day. In the next 8-day candle that has 3 days, 4 hours remaining, red and blue are both likely to be below white level 30, heading down towards white aqua level 20. but we could continue to see the price action coming down more in the 8-day. We are already overextended down a little bit in the 8-day, as I mentioned before in the last YouTube live stream that I did. I don't know, was it day before yesterday? Here's the near-term group. In the near-term group, you know, it's kind of looking nasty, because here's stage 1 expansion down. Now here's the red below white level 30. Then red got below white aqua. Now the red's down here at aqua level 10. And the green is below aqua down here near orange 0, and the price is coming down here towards the orange lower B band, going down from the aqua. This blue, 1 day 4 hours from now we get a new 6-day candle. That blue gets below white level 30. That's subject to provide more fuel for more expansion down. For these B bands to expand, open up, the price action continue coming down to where? I'm thinking somewhere around that white diagonal trend line. This white diagonal trend line down here. Where is that white diagonal trend line? That's at 26 cents. But you know, I'm saying within proximity of that. Do I know that I have my diagonal pitchfork set up with Fibonacci levels on the style? Do I know that I have it at the correct angle quite yet? No, not really, as far as macro view of diagonal support and resistance levels. And those levels being, they're based on Fibonacci and in log scale. Do I know I have it the correct angle yet? No, I'd like for it to come down one more time. You know, we have plenty of history for Ethereum, Bitcoin especially, where I kind of trust my diagonal trend lines a bit more. At the end of this distribution, when we get our sign of weakness, then I'll be able to probably have more dependable diagonal trend lines. But right now we're estimating around, let's just say proximity of 26 cents, within proximity of that. That's if we came down this candle. Well, what about the next candle? Now 26.84, just shy of 27 cents. You know, what about the next candle? You know, it depends on when it comes down. But let's go to other time frames. Yeah, I agree there, Caspars. Alright, so I've already mentioned in that 6-day, 1 day, 3 hours from now, if this red and blue, we're waiting on this blue, red and blue both get below white level 30, this green then begins to go sideways at 0 or even below 0. Look out now. We're on the verge of seeing more expansion down in that 6-day. That's basically going to do what this 5-day is doing. You know, stage 1 expansion down when the red and blue both went below yellow level 50. B bands are opening up more. Stage 1 expansion down. Now it looks like we're beginning stage 2 expansion down, where both the red and blue are below white level 30. The red is below aqua level 10. Where's the price action? It's below the aqua lower B band. It's going down from the aqua lower B band towards the orange lower B band. Just like the red is going down from the aqua level 10 towards the orange level 0. Again, the red line is the price mean, is showing basically the fair market value or price of this asset at this particular time that remains in this specific candle. This being a 5-day candle that has 2 days, 3 hours remaining. But we know that the red and blue both going down below white level 30, we're subject to get stage 2 expansion down. Even more expansion down. To where? Possibly around this white diagonal trend line. Can we come down to the yellow diagonal trend line? Somewhere around 21, 22, 23 cents? That's possible. You know, we'll look at some other charts here in just a minute. And stage 4 expansion down, and red's coming down here to level 0 where we could attempt stage 5 expansion down in the 2-day time frame. We're trying to begin stage 4 expansion down here in the 3-day time frame because red and blue both going below aqua level 10. Stage 3 is white aqua level 20. Stage 2 is white level 30. Stage 1 is yellow level 50. Yeah, almost all of these red and blues are at least below white level 30. Almost every single one of them, even the weekly. It's the 6th day that was holding us up. That blue was taking its sweet time getting down here to white level 30. That was the main one holding us up in all of these time frames in regard to seeing a significant amount of expansion to the downside. But it's about to get to the point where the planets have aligned in this entire near-term group where we get a serious move to the downside. To about where? All right, this is the this is the short-term group. We'll go and have a look at the short-term group. Red and blue both getting below yellow level 50 in the 30-minute. That creates calls for stage 1 expansion down. Red and blue going below white level 30. That creates calls for stage 2 expansion down. We went down a little bit. Now here we are, came up a little bit. At this particular time, my Phoenix ARI did not want to go above level 20. So it's highly likely that, you know, aqua, at least the white lower B band is going to act as resistance right here when going up. Why? Is this red line anywhere ready to go above even aqua lower B band right here? Aqua level 10, aqua lower B band. Is this red line ready to go up above aqua level 10 so that the price action can go up above aqua lower B band towards the white lower B band? No. So that's reason where then when the green turn back down again, well, by that time, dang, red and blue are not only below white level 30, not only below white level 20, now we're down here below white aqua level 10. We had stage 1, stage 2, stage 3 when they both went down below level 20 and we got a real big drop down. Then we had a pause after stage 3 to come down here again with stage 4 because now the red and blue are both below level 10. However, the green came back up again real quick. So we had our stage 4 on that red candle down. We've come back up again. Does it look like the red is ready to go up above aqua level 10? It looks like it's trying to. In that 30-minute, it's trying to. By the way, what we're covering this 30-minute would be no different than the 30-hour if it would allow us to see 30 hours, but it doesn't. The max is 24 hours. It'd be no different if you were looking at the 3-day or 30-day or 30-second. It'd be no different. We would go by the same rules. Red about to fall down below white aqua level 20 in the 3-hour, but we see red and blue both below at least white level 30. That creates calls for stage 2 expansion down, but I call this stage 2B. Stage 2A was right here when red and blue both went below white level 30, and we even ended up with a stage 3 expansion down Stage 4, we didn't get much expansion, but the price did go down and the B-bands were still expanding. We had a pause for a while, but note how we had a hard time getting above the white lower B-band here, y'all. The white lower B-band was acting as resistance. Why? Because this red line needs to be on the verge of going up above white level 30 to increase the odds of the price action going up above the white lower B-band towards the yellow B-band basis. The odds of the white lower B-band acting as our ceiling of resistance in that 3 hour each time was actually pretty high. Except in here, it looked like it was going to get a chance to maybe, that yellow K line was above the magenta D line. Even my Phoenix ARI turned green. We got above 20 in that 3 hour. But if you double that 6 hour, you have to also look at other time frames, not just this 3 hour. What about the ceiling of resistance in higher time frames? That's very important to pay attention to. Is our red ready to go above white level 30 here at the time, or which would be the white lower B-band? Have a look at the price at that time and see if the price of the white lower B-band at that time is pretty close to the price of the white lower B-band in here at that time. We don't just look at one time frame to determine where is our ceiling of resistance. Look at multiple time frames. You'll be surprised how often that white lower B-bands and multiple time frames are pretty close together, where you can kind of get a range of where your ceiling of resistance is, so that, for example, if you did open a long position, you know where you need to close that position and not take any more risk. Close the position. I'm looking at the chat here for a moment. Yeah, the ARI is a blast from the past, but I've been testing some other things here lately. In my live testing for the scripts, I've included the ARI here for a bit just to see if it might be helpful, but we'll see. That's still an ongoing test here. Just as I told my telephone technicians, cable repairmen, installer repairmen, outside plant engineers, don't assume anything, and don't spit out things out of your mouth on a specific subject if you have not done all your research on that subject, know every detail about that subject. Then you might be able to not only benefit yourself but others, because if you do it so detailed, pay attention to detail where you understand it very well. Investing the time to do that could offer great dividends later in the future, not only for yourself but for others. That's why I'm doing this extensive live testing at the moment before I spend an extensive amount of time creating more additional educational videos on the website. I want to make sure this is right before then implementing it into the script to eventually get that script automated with premium subscribers, but also basically explain how the script is working, not doing the script for you, but explain what this script is doing, what is it looking for when opening and closing long and short positions. That way, in other words, whenever I taught telephone technicians how to use their meter to identify, locate, and clear troubles, I tell them what button to press on that meter to measure whatever it is they want to measure, where's voltage, current, resistance, power influence, doing a gain slope test, whatever. What button do they need to press to do what they want to do? All right, when they do push that button, what should they expect to see electrically? What's the requirement? In other words, there's got to be some reason why I'm measuring this. Well, for instance, in order for there to be current for any work to be done, there has to be voltage. Got to be voltage. Got to see voltage first. You got to see pressure voltage first. And like in the telephone industry for copper wire, twisted pair wire, the voltage is a range 48 to 52 volts. 48 to 52 volts. You could see like up to 54 volts, sometimes up to 56 volts behind a 5E slick. We're not going there. All right, but the requirement, 48 to 52 volts in most cases. All right, and just say you measure voltage is good, and I have no dial tone. No dial tone. First thing I got to have is voltage to get dial tone, and let's say I measure it and it's 52 volts. I say, well, my voltage is good. Well, the next thing I got to have to get dial tone is current. So I measure my current that's measured in amps normally, but in the telephone industry they use a very small amount of current. They call it milliamps, thousandths of an amp. 28 milliamps. Excuse me, in this case, hundredths of a milliamp. 28, thousandths of an amp calls a milli. 28 milliamps. 28 milliamps is, excuse me, it used to be not 20 to 23 milliamps. 20 to 23 milliamps. That's the requirement on current. Let's say I measure my current and I do not see 20 to 23 milliamps. Instead, I'm seeing 2 milliamps. 2 milliamps of current. It's not the requirement. Well, that's why I'm not getting dial tone. Well, the next thing that should come to mind is resistance, because current is affected by resistance. Resistance is the opposition any material offers to flow of current. So resistance, if the resistance or opposition to current is high, my current's going to be low. I've got too much resistance. That's what common sense is telling me. How could I have too much resistance but my voltage be there? Well, it can't be because of a clean open where one of my two wires, twisted pair, where one of them is clean open. If it was clean open, I wouldn't see any voltage at all. So we have added resistance, but not because of a clean open. We must have a partial open. Well, is the resistance in that partial open high or low? It's got to be high. Why? Because my current is too low. I try to keep it simple. Stick to basics. Don't let it get complicated. When I measure voltage, how's that meter measuring voltage? So when I press or tell them what button to press to measure what they're going to measure, when they do press that button to measure, how much should they see when they measure? Not only that, why? Why do I want to see this much voltage or this much current? This much, no more than this much resistance, etc., etc. Also, what is their meter doing on the inside when they measure voltage? What is it doing on the inside when measuring current, when measuring resistance? Because if they remind themselves what their meter is doing on the inside when measuring voltage or current or resistance, that's going to help them determine what they're going to do next to make sure they properly identify that trouble. But that's basically how I'm wanting to break this down with my methods that I'm creating here with Phoenix Ascending and Badass B-Bands. Potentially Phoenix ARI added as well in the future. I'm seeing if I want to do that. Right now it kind of looks like I might do that, but I haven't decided on that yet. Sorry about that stint that I went on in the telephone industry, but I went through everything in detail. It got where a lot of telephone companies did not want anybody to teach their technicians but me. Period. Not to brag, but I was a damn good teacher in the telephone industry. That's what I want to be here in the trading industry. I retired from the telephone industry after 20 years. Now I've been in trading for a little over 8 years. And what I was seeing traditionally, it just didn't work for me. It did not help me. It seemed like too much guesswork. I want to know as much as possible. And I saw eventually that it's impossible to know, but you can measure odds. What do the odds look like of us doing this, going up or going down? What are the odds of that occurring? I needed indicators that can tell me when we have increased odds of going down. I want the odds to be more in my favor of going down for a short before I open a short position. I know it's risky, but by seeing higher odds, I think it's less risk. That's what I'm getting at. I wanted to find something simple that I understand. And from what I was getting from other traditional teaching, could be candle patterns or even MACD. I can show you so many ways how my indicators are so much better than MACD. It is. Now MACD is pretty good. I was using that at first when I first started, but I was like, this ain't enough. This is not enough. That's when I also learned energy more. The energy in the Phoenix Ascending indicator. MACD doesn't have any white energy. Also learned more about stochastic RSI. I was using that quite a while before Phoenix. Before Phoenix, it was mainly MACD and stochastic RSI. If you check RSI daily, it's at bottom and oversell. They can make some pump and retest, but it should be bottom close definitely. All right, and let me say this as far as oversold. Most of the time, I'm using overextended because if that particular time frame that you're looking at may suggest oversold in your expression. If you look at a higher time frame, you're seeing where there can be more additional expansion down, and in that case I wouldn't necessarily say it's oversold yet because it looks like it can continue going down. Not only in higher time frames, let's say you're looking at the 3-day, you doubled that to the 6-day. The 6-day also looks like it's about to get expansion down. Well, now let's cut the 3-day, where we just doubled the 3-day. Look at the 6-day, it looks like it's to go down. Well, that's half the 3-day. Look at lower time frames. See if they too show that we can continue going down. And if you see, of course, half in 3-day, that's 1.5 days. We don't have a 1.5 day time frame. So I look at the 2-day, 1-day, and 12-hour. And the 6-hour. Red and blues are all below yellow level 50. They are for ADA. They are. Like here was the 3-day. It's looking like stage 4 expansion down. Well, can it continue going down when looking at the 2-day? Yeah, red and blue going down below. Does it look like we're about to get stage 2? In this case, stage 2C expansion down in the 24-hour, where the red and blue are about to go below white aqua level 20. They're already below white aqua level 30, about to go below level 20. Actually, that'd be stage 3B. Stage 3B, my bad. Stage 3B here too in the 12-hour. Where the red and blue are about to go below white aqua level 20. That looks like it can go down, in the 12-hour. Now let's cut the 12-hour and have a look at the 6-hour. Isn't the red and blue just now going below white level 30? And the green's going down. The green was angled down a little bit right there. Red and blue are both below white level 30. Now we're going really down. We knew that the risks were pretty high of continuing expansion down here. Have increased volume to the downside, increased selling pressure here. Look at the 8-hour over to the far right. Red is already below white level 30. Let this blue get below white level 30 in that 8-hour. Right now it's not. It's just a smidget above it. 31. Green's going down right now. Let that blue come down below white level 30. We're going to continue more expansion down. Is it just going to wham slam down? We don't know that. We don't know what we don't know until we know it. Bottom line is, though, we do see potential for more continued downward pressure in this 8-hour, especially if that blue goes down below white level 30 in the 8-hour like it did in this 6-hour. Like what we're seeing here in the 4-hour, the 3-hour, blue and red are below white level 30. Green comes down, we get expansion down. Basically, I say it's overbought whenever I see this overextension down is basically about to come to its completion. All right, now we're overbought. When it first goes down, you may say, yeah, we're overbought, but you can't necessarily say by how much yet. You can't necessarily say by how much yet, because we may still be going down. especially if we get on the subject of supply and demand, but we're not going to go there. I don't want to make this stream too long. In my opinion, this is just a slow bleed down. A slow bleed down. And on those slow bleed down, remember how I just mentioned, I don't know, 20 minutes ago? By looking when the red's ready to go up, let's say above white level 30 in this 4 hour, in order for this white lower B band in this 4 hour to no longer act as resistance, where we might can go up from the white lower B band. Well, we still have yet to see the red try to do that here in the 4 hour or in the 6 hour, or the red's way down here at level 10 in the 8 hour. You know, so as far as getting on up here, ready to go up above white level 30, so the price action can go up above, go up from the white lower B band in the 8 hour. You know, we're still ways off from that. I would not be thinking about opening a long here right now for sure. Just put it that way. Not yet. At least not one that you would keep open for any kind of extended period of time. You know, we're just not seeing that. I sold at 42 cents because I saw your last article. Thank you so much for saving me. Right. Sure, you're very welcome. I'm simply describing that correction acting out in the form of a slow bleed instead of a what could be the word for it? A markdown, a serious markdown. Because capitulation, it could be all of a sudden, or it could play out over an extensive period of time. This is the 15 minute, by the way. The immediate group. Here's the 5 second time frame, 15 second, 30 second, 1 minute, 2 minute, 4 minute, 8 minute, 15 minute. The red looks like it might try to get above white level 30 here in the 15 minute. So will the price action try to rise up from the white lower B band towards the yellow B band basis? Let me say something. This blue line needs to be also above white level 30 to along with the red to increase the odds of going up from the yellow B band basis to the white aqua upper. So that blue is as low as it is. That decreases the odds of going up all the way to the white aqua upper. That decreases the odds of that occurring. Like here, red and blue got above white level 30. That increases the odds of coming up to the white and or aqua upper. We came up to proximity of it. Same thing here in the 2 minute. Both red and blue get above white level 30. Not only can we go to the basis, but that increases the odds to go up to the white aqua upper. It ended up more like the white aqua upper came down to us. We did go up a little bit, kind of met each other halfway, let's say, in that 2 minute. So looking at this 15 minute, yeah, the red, the next 15 minute candle might go above white level 30. When it does, what if that green's coming down like we did here? Remember me telling you this? The very moment, see, when this energy went above level 50, now we have upward buying pressure that continues for how long? Until this white energy turns down. That's how long. Very moment it turns down, the price action's coming down. It's impossible for upward pressure to continue even though the white energy's coming down, because really downward pressure is not triggered until here in a specific case. Then some downward pressure can seriously begin. What case? When the red goes down below level 50 along with the energy, then we can start getting some serious downward pressure. Wasn't our red already below level 50 here? Yeah. In order to have upward pressure, the red needs to get above level 50. The very moment that energy turns down, if that red is not above level 50, we are not going to continue upward pressure. We are going to begin downward pressure. And then it's really going to pick up if that red is still below yellow level 50 and the white energy gets below 50, then that downward pressure is really going to pick up. How much? Well, it could end up being stage 2 expansion down. Why would we say that? Because the blue and the red are below white level 30. We can go down from this white lower B band, and it can pick up with some expansion down, stage 2 expansion down in this 15 minute. Of course, that's what ended up being the case. That's just the same way that I described that for the 15 minute. That could have been the 15 hour, the 15 day, the 15 month, 15 week. It doesn't matter. You would apply the same rules. All right, you would be looking right now. You see the red is not ready to go up above white level 30, so we're not going up from the white lower B band towards the basis. Now let me say this. This is measuring odds. Right now the odds are kind of low of us going up from the white lower B band in the 15 minute if we were just looking at the 15 minute and no other time frame. But we cut the 15 minute in half. That's 7.5 minutes. Let's round up 7.5 to 8 minutes. This red and blue are getting close to yellow level 50, where they're both above white level 30. That increases the odds of going up to not just the basis, but also the white aqua upper. Also, the red is the price mean. That indicates the price should be just below the yellow level 50, which is just below the yellow B band basis. That's where we are right now. Do we think the next 8 minute candle, it goes above level 50, the green keeps rising? Can't we go up from the yellow B band basis towards the white aqua upper? Yes. When the red and blue both got above white level 30, the odds have increased to potentially not only go up to the basis, but also to the white aqua upper. So you may take partial profit at the basis. Sometimes you have a pullback to the white lower before then going up to the white aqua upper in some cases. I do have lessons for that on the website, but I'm going to provide even more details on that in upcoming lessons. But we're not getting expansion up, are we? In that 4 minute, the B bands were still contracting. We're not getting expansion. Why are we not getting expansion up in that 4 minute? It may be because this red and blue need to be on the verge in the 8 minute to get on up above level 50. But again, that blue in that 15 minute is super low, y'all. Yeah, we might go up to that basis, is looking like, which would be around 34.30. Yeah, that is possible, but that 8 minute, that green turns down, we're falling down from the white aqua upper B bands here in the 2 minute potentially. Here's the red at just below white aqua upper. We're looking at that 2 minute. Red here, whenever it was angling down right here, getting on the verge of going down below white level 70. We're going down from the white upper B band towards the basis, but also at risk to continue down to the white aqua lower. Why? Because red and blue are below white level 70. That's why. And we did end up, yeah, we bounced off the basis a little bit, came near the white upper, but then yes, came down to the white aqua lower. The red down here below the white level 30, but the price did not quite go below white lower B band, but it came down to the white lower B band. Again, everything that I'm saying here, describing here in these very low time frames, you would apply to higher time frames, meaning even you know, the short-term group. Right now, our white lower B band in the 30-minute is still acting as resistance. 3421, 0.3421 is still acting as resistance. This current 30-minute candle that has 28 minutes remaining, look at that red in the 1 hour. It's super low. It's below the aqua level 10. Therefore, the aqua lower B band is currently acting at resistance at about 3423, 0.3423. I gotta pee real quick, y'all. I'll be right back. I'm gonna pee. Be right back. All right. Sometimes you just got to go. If you I don't necessarily. Yes, I do look at like Dixie and stuff like that at times, but bottom line, I'm not necessarily going to use another pair, especially if I'm trading crypto. And then basically say if this legacy asset index whatever does this, then crypto's doing this. No, I've learned to be careful making flat statements. Be careful making flat statements. Eventually it'll get out of collocation. Where if this does this, then this is going to do this. No, be careful of making flat statements. That's why I'd rather just rely on what the indicators are telling me at any given time. All right, let's look at Bitcoin Cardano. We've already seen the indicators, looking at them, looking like that, yeah, we can still seriously keep coming down with our sign of weakness. This sign of weakness is not done yet. We can keep coming down based on what we saw in indicators in multiple time frames. Yeah, in the short-term group, in the immediate group, it may be coming up a little bit, but hey, especially that near-term group and even higher groups of time frames, this still looks bearish, y'all. And when using our knowledge of Wyckoff method 2.0, we know that, hey, we've already had a phase D as in delta sign of weakness event. We transition from phase C into phase D whenever we close below this lower boundary of our preliminary supply range. Phase D followed by an up thrust, higher low, weak buying pressure, last point of supply, last point of supply, last point of supply, because we haven't had a sign of weakness yet because we have not closed below that wick there. Now we've closed below it. We could be working on a sign of weakness here. That's why I threw this line here We could be transitioning from phase D into phase E, meaning it could have been where this was not a backup last point of supply and communication, backup last point of support and in accumulation. Could have been that was not that all of this could have been our backup last point of support and accumulation, because we never went into full-fledged distribution if we did not transition from phase D into phase E. If we did not do that, let's say if we did come down here a bit and then came up real hard here with a simple reaction and accumulation, come back a little bit, now sign of strength, I would have said that this was not our backup last point of support and accumulation. That was just a large last point of support event before going up with our sign of strength here. All of this being our backup last point of support event in phase D, having a huge phase D before transitioning into phase E. We're not getting into that. That's rare. That is rare to see that. Usually that's an historical event, which are common to see but rare to see on each individual asset or currency or whatever. We're still working on phase sign of weakness, phase E, and distribution. Now where could we fall down to? That's whenever I kind of use, in this case, descending trend lines or diagonal trend lines, but I put it on here descending. We're not looking at the ascending. I do have other charts with ascending, but I threw a descending one on here for more local. Our 0.5 fib retrace is 23.48, about 23.5 cents. I'm thinking that we at least come down to this yellow diagonal trend line that was acting as resistance here for a while, acting as support here for a while. Will we come down to test that support on that descending diagonal trend line? That is around within proximity of 27-28 cents. To me at the moment it looks highly likely. Now 27 to 28 cents. Let's go back to higher time frames, like in the super macro group. The super macro group. I'm going to change this 8-week time frame to 7-week. Is it possible the next 7-week candle that begins in 3 days and 3 hours? 3 days, 3 hours from now, we get a new 7-week candle. This white lower B band is rising. The next 7-week candle, it may be around 15 cents. Could we come down to within proximity of that? I mean, it's possible. I've learned to stop making flat statements saying we're not going to do this and then end up doing that, because hell, we could come down to the 0.618 at 0.1277, a little over 12.5 cents, about 12.75 cents. Could we come down to that? I mean, sure, that's possible. That's at the lower boundary of this range here before we legged up. The upper boundary of that, however, that's right at this yellow diagonal trend line around 18.5 cents. So could we come down to that eventually around 18.30, little shy of 18.5 cents? That's possible. So really, I'm in that yellow diagonal trend line. That's right here in line with where it's kind of acting as support here, acting as resistance here. So could we come down to that around 18.18, something like that? That's possible. Here's what's important. If you opened a short up here or sold up here around 40 to 42 cents, you're watching your indicators in multiple time frames, seeing that downward pressure is continuing. You seeing that the price action can go down with expansion in many time frames and various stages of expansion down, and you have yet to see the red and blue begin to get above. I say again, above. Now, right now they're below yellow level 50 in the short-term group, the red and blue lines, well below. Let's go back to the short-term group. Red and blue lines in this 8-hour began to get well below yellow level 50. The red and blue in the entire short-term group is below yellow level 50. The red and blue in the entire near-term group is below level 50. I can continue on all the way up to the super macro group, where we finally see where the red and blue are not both below yellow level 50 in the super macro group. I see in this 5 week it is, but we don't have enough data history for the 6 week, the 8 week. Well, excuse me, that's the 7 week now. If we don't for the 7 week, we don't have it for the 8 week. I guarantee if we had enough data for a blue LSMA here in the 10 week or the 12 week, we'd see that the blue is not below yellow level 50. Yeah, that's the only group, but in the super macro group. But the macro, every single one of these red and blues are below level 50. Not only that, they're below white level 30. Every single one of them. Every single one of them. Now it's getting to the point where almost every single one of them are below level 20. See, right now the red and blue in the 11 day, but it's really not part of the macro group. It's only here for pressure races with the 22-day time frame. So I don't really consider that part of the macro group, but it is also below white level 30, suggesting that we can fall down from this white lower B band in the 11-day time frame, with the red going down from white level 30 equates to potentially, or having increased odds of going down from the white lower B band to where? Potentially the aqua lower B band in that 11-day time frame. Where is that right now? Close to 21 cents. Close to 21 cents right now currently in the 11-day time frame. But as far as using a B band for a target right now, it's gotten to the point with ADA where the B bands are getting so wide, I would almost rather put more weight, let's say, on what I'm seeing with my diagonal channels coming down, along with my fib and horizontal, not diagonal, but horizontal support and resistance levels. I'm thinking this may be it, where we went sideways here for a while. You know, somewhere between 28 and 23.5 cents. 28 and 23.5 cents is what I'm thinking might be our floor of support. Do I know that? No. We would have to be watching indicators to see that when we come down with a sign of weakness, as far as where we go down to, that can be hard to determine at times, late in distribution, especially with what's going on in the world right now, socially, politically, geopolitically, financially, economically. And we're not going there. I did the previous stream. I don't want to waste time on that this stream. But yeah, I can see at least around 28, if not 23.5. That is certainly on the table, in my opinion. 23.5 to 28, meaning we may blow through 30 cents. Down a little lower. How much lower? Maybe 28 to 23. 23.5, excuse me. 28 to 23.5, and 23.5 is the 0.5 fib retrace. We have had support of the 0.382 for quite a while. We're finally breaking down below it with a sign of weakness in phase E. I think 18 cents will be the ultimate bottom where we will bounce hard. Yeah, I could agree with you there, Davis. Yeah, you could do that if you wanted to with a small amount, 10x, or you could do it with a large amount of your own equity in a smaller position size like 3x to allow room for any kind of wick, shakeout, liquidation move to kind of protect yourself on a sudden move down all of a sudden and try to liquidate, that being done by the composite groups where they themselves already have buy orders there and they intentionally push it down to there to help fill those buy orders, where then they start or those long orders where they then start opening buku long positions from there, pushing it up to really, really profit off those long positions that they had down real low, let's say around 18 cents and maybe around 10 cents. You have to watch them. So that's why in that particular instance, that's something you may keep open for quite a long time. In that case, I tend to do low leverage with a larger amount rather than higher leverage with a lower amount of equity. But that's me. I'm not saying what you're doing is wrong. I'd rather you do what you're comfortable with. Bitcoin. On that red diagonal trend line. We've been riding on top of that red diagonal trend line here. Are we coming down to the aqua, the green, or the blue? The aqua being the diagonal negative 0.382, the green being the diagonal negative 0.618, the blue being the diagonal negative 0.786. Excuse me. This is 0 here. This was your 618. This green here is your negative 1.618. See how we had support there for so long across the negative 1.618. Here's the positive 1.618 diagonal fib extension. Here's the positive 0.618, negative 0.618, that green, negative 1.618 is right here. That green is the negative 1.618 diagonal fib extension. Could we come down to the 382 or even the 618, possibly the 786? That too is possible. It came down to the 786 here, but most of the candles closed around the 618. But we did have one instance here. This was the Wyckoff spring, where we wicked down to the diagonal 1.786. If you're wondering what the difference is between this and these other ones, this is Bitstamp. This one is BLX. That is a little different. So Bitstamp, I'm thinking that green, negative 1.618, BLX. I'm also thinking that green, negative 1.618, possibly the blue, negative 1.786. That is certainly possible. We're already on the blue 0.382 on BLX. This is the short-term group. I'm just looking at these where we see blue below white level 30, but the red's not below white level 30. I mentioned in a previous stream that it did look like to me that, you know, we're still sideways a while. I explained in that previous stream for Bitcoin how it looks like we're still sideways for a while, but I definitely do not see any clear indication that we are on any kind of reversal to the upside. No. Red and blue in this 24-hour, they're getting below yellow level 50. Both of them below yellow level 50. Green's going down. We're subject. We have increased odds of seeing stage 1 expansion down. Does that mean we will absolutely get it? No. But I would want to open shorts in which I have, where I see something like that, knowing that I have increased odds of that occurring. That's whenever I would want to initiate a trade, execute a trade, which means I'm initiating or executing risk. In this case, I see the risk lower of the price action turning against my position based on what I'm seeing in the indicators. If you'd opened that short sooner, you know, that's just looking at it in the 24-hour time frame. Green's going down, that's good enough for me. In the 24-hour, the K line's below the D line, and the green's going down, and the K line is below level 10 when it went below the D line. That's enough for me if I was short-term group scalping. Cut the 12-hour and a half to the 6-hour. The K line's below the D line, and it's below level 90. Earlier I said below level 10 for the 12-hour. I meant to say below level 90. K line is below the D line, and it's below level 90. And the green came down. Red made contact with the green while going down, indicating downward pressure. Now our white energy is about to go below level 50 as well, so we can expect some downward pressure. And when the red and blue both go down below white level 70, there's very good odds you're going to continue down to the white aqua lower, which that ended up being the case. But this has been moving slow, y'all. This is the 6-hour time frame. We have just a 1.7% spread. 1.7% spread between the white lower and the white upper. There's actually better trades than this on other pair. Rather than opening a short on Bitcoin, you would have been better off opening a short like on CRV or Cardano or Matic or, you know, something like that, where you have larger percentage moves. Don't assume that you're better off increasing your capital substantially by just trading Bitcoin. You're missing out if you're not also trading altcoins. That's my opinion, of course. Don't be biased. Don't assume by trading altcoins that you're supporting them, even though you don't like them, because you may be a Bitcoin maximalist. I'm about increasing capital. You can even increase the amount of Bitcoin capital you have if you increase the capital you have in other assets, and then use those assets to buy your preferred asset, Bitcoin. It's common sense. If that's what you want is Bitcoin as far as your investment for long term, you can use other assets, make money off those assets to invest more in the asset that you love, Bitcoin. But in my opinion, is Bitcoin the way to go? No. Next best way to go, Cardano, that's my opinion. The ultimate way to go, Monero, for a number of reasons. As far as wealth goes, Monero. That 3-day, we're waiting on this red and blue to go below white level 30. Green's turning down, blue's already below white level 30. If the red then gets below white level 30 like we did here, let me show y'all something. What I'm about to show you is kind of similar. Alright, this yellow vertical timeline, our blue was already below white level 30. That red gets below white level 30. Isn't white level 30 synonymous with the white lower B band? It most certainly is. Let that red get below. Keep going down below white level 30, and that green's still going down. Let that occur. That means we can go down from the white lower B band. Not only that, we can get expansion. Expansion down. As I've mentioned often, stage 1 expansion down is when the red and the blue both get below yellow level 50. We begin at stage 1 expansion down. We got stage 2 expansion down right here. Red and blue both get below white level 30. Now we're about to get stage 2B. This was stage 2A. Stage 2B, where the red and blue get below white level 30 again. You're going to start off with your stages. If the red and blue get above yellow level 50, we're starting over with stage 1 again, and all that again. But again, the blue's below white level 30. The red's working its way down towards white level 30 in this 3-day. So we may still be sideways here for a while, y'all. Several more 3-day candles. If we're to see another sign of weakness again to the downside, we don't see the green and the red turning up to go up above yellow level 50, which would equate to what? The price action going above yellow B band basis up towards the white aqua upper B bands. And then, do you think you would get expansion up anytime soon? Reversal expansion up. Well, to get expansion up, stage 1 expansion up, both the red and the blue need to get above yellow level 50. Way this blue's going at the moment, do you think that's going to be occurring anytime soon with the red and blue going above yellow level 50 to see a serious move to the upside? No, I do not see that anytime soon. Each candle is a period of 3 days. All right. Also, as far as any expansion to the downside, we should have normally see stage 1 expansion down when both the red and blue are below yellow level 50, and they are right here. But the B band still contracted here. We didn't get expansion. Well, I wonder if we'll get expansion when the red and blue get below white level 30. That's the next one, stage 2. Let's see if we can get that, but it's going to take a while probably before we get it. We still have 1 day, 3 hours remaining in the current 3-day candle. Let's move this over. Maybe around 28 October. Nah, I'm going to say 31 October. (25 October to 31 October). A 3-day candle that begins on 25 October or 31 October. If we're to see a sign of weakness to the downside based on the current trajectory of the red line, where the red and blue are both below white level 30, maybe sometime between 25 October and 31 October. As far as a stage 2 expansion down, based on whatever trajectory that it might take. Now, is it possible it can all of a sudden begin much sooner right here around 22 October? Yes, certainly is possible on the 3-day candle beginning 22 October. We can't rule that out. But if it stays the same trajectory as it is right now, maybe 31 October at the latest, but it could begin angling down here around 25. But we probably should say anywhere between 22 and 31 October. We're looking at more and more increased odds of getting expansion down for Bitcoin. Not just going down, but going down with authority. Expansion down. Like we did here when the red and blue, here finally the blue got below white level 30. Going down with authority. Red got above white level 30, but here it goes down below white level 30 again while the blue's below white level 30. Down with authority. Are we going to get that here? Let's say especially in between, let's just say 22 to 31 October. That's what we're potentially looking at, increased odds of that occurring. Us going up, especially with authority. The only way we have a chance of going up with authority doesn't mean you will go up with authority. Did we go up with authority right here when the red and blue went above yellow level 50? To me, that's not with authority, because up with authority implies expansion of the B bands, not contraction. Not contract. We got contraction. That's not up with authority. Are we going to go up with authority anytime soon in the 3-day time frame with both the red and the blue getting above yellow level 50 here? No. If we have any kind of expansion here, I would have to say that odds are much higher of getting significant expansion down than significant expansion up at the moment, based on this information that we're seeing right here. What we're seeing right here. That's my opinion, of course. All right, let's go back to maybe right here. The reason I wanted to go back to this chart where I pointed out 22 October to 31 October. Here's November 9th. Here's 28 October. Right here's 31 October, where we just went sideways right here for quite a while from 10 October to 31 October. Just went sideways here for quite a while. Then kept going sideways here for a while in November before then finally falling down with a sign of weakness. Guarantee if we were to look at the 3-day time frame right here, back in 2018, it looked nasty. It looked nasty. And if you looked at higher time frames, it looked nasty. I didn't know here how much I know today. I wish I knew here what I know today, because I would have made a killing here. But I didn't know here what I know today. I didn't even have badass B-bands here like I do here, nor the knowledge that I have now. But there's always room to learn. Always. Don't get cocky, hard-headed, thinking that you know it all. That's not being open-minded. There's always room to improve. Always. Even for me. Always room to improve. If I'm not growing, it's no fun to me. It eventually gets old, get burned out. Something has to interest me. It has to really interest me in order for me to love it. If I see room to grow, there's so many different situations here in trading where it's like you just learn something new all the time. And make sure to pay attention to detail, not just in one time frame, but many time frames to get the entire story of what it's telling you. But at the same time, in my opinion, it's important to understand, to know Wyckoff method, Wyckoff method 2.0 in particular. All right, let's look at the super macro group for a moment for Bitcoin. That would be the 2 week, 3 week, 4 week. Let's increase the font size, by the way. 4 week, 5 week, 6 week, 8 week, 5 week, 6 week, 8 week, 10 week, 12 week. I doubt we get expansion down here in the 12 week, even though the red and blue are about to go below yellow level 50. 1 month and 15 days from now. Same thing here in the 2 week, in the 10 week. Red and blue getting below yellow level 50. Creates calls for stage 1 expansion down, but it does not mean that you're going to get it. But you have increased odds of that occurring. But it may not be doing that anytime soon in the 10 week, seeing how the 8 week is not even ready for stage 1 expansion down. You see what I'm saying? Because red and blue are not below yellow level 50 in the 8 week. So even if and or when the blue goes below yellow level 50 in the 10 week, that doesn't mean that you're going to get expansion down just yet in the 10 week if the 8 week is not even doing that. The 8 week would be holding it back in that case. Just as the 6 day is holding back us from getting significant move down for Cardano. Red and blue are below white level 30 in every single time frame in the near term group except the 6 day. And except the 12 hour for ADA. 6 day. Red's below white level 30, but not the blue. And, now the 12 hour is that way. The last time I looked at ADA, the red was not below white level 30. The last time I looked at it, and I said at least about 34 more hours. When looking at something else, I forgot what that was that I was looking at. I was saying at least 34 more hours. I can't remember what time frame that was I was looking at. It may have been the 8 hour I was looking at the time. I believe it was, and I was saying at least about 34 more hours. But the blue did not go down below white level 30 along with it. It's just been hovering just above white level 30 in the 8 hour, but man, we are at serious risk of it going down in that 8 hour. Because when we see this near term group with every single red and blue below white level 30 except for one time frame, the 6 day time frame, 1 day and 2 hours from now, not only could we just be milking down, a slow bleed down, it can pick up. It can pick up momentum going down, selling pressure going down. When we look at the near-term group for Bitcoin, this is the near-term group for Bitcoin. See how our red and blue are still above white level 30 in the 5 day, the 4 day, the 6 day, and the weekly. They're not below white level 30 yet. We're not quite there yet in the 3 day, nor in the 2 day, nor in the 1 day, nor in the 12 hour. Why do you suppose that is the case for Bitcoin, where in the near term group the red and blue are not even below white level 30, like what we're seeing with Cardano? They are selling Cardano ADA USD while keeping BTC USD going sideways. Why? So that they can sell their Cardano also for Bitcoin. They are accumulating Bitcoin by selling their Cardano for Bitcoin on the ADA Bitcoin pair. So not only are they knocking down or selling their ADA for USD, they're also selling their ADA for Bitcoin. All right, then once they finish selling their ADA for USD and for Bitcoin, they'll start using that USD to then begin buying Bitcoin and to buy ADA. Yeah, not only that, they're opening position. I'm talking about composite groups, those that manipulate the markets, and actually they're at battle with one another, y'all. Just kind of look at it as black hats and white hats, big whales. They're not all in collusion with one another. You can bet there's some, man, I really want to accumulate me some Cardano. Yeah. While others are manipulating it for other reasons, to accumulate more Bitcoin. But then you have what I call Cardano whales. They're all about accumulating Cardano. That's what they want. So that's their main focus. So they are there to offer a lot of buying pressure when you have a lot of selling pressure from, let's say, Bitcoin whales wanting to accumulate more Bitcoin, but they do so by also trading the altcoin pairs, because that's really where they accumulate most of their Bitcoin, is on the altcoin Bitcoin pairs, especially with margin positions too. Getting their payment on their margin positions in Bitcoin, especially during a bull trend. They want their payment in Bitcoin while it's trending up for the long and macro terms on all their margin positions, rather than getting paid in USD or USD Tether. They'd rather, when they close their position, to get paid in Bitcoin during a bull trend. During a bear trend, you'd rather set it up like on Bybit to get paid in USD or USD Tether. Yeah, we're not quite ready there yet for Bitcoin, in my opinion, to go or see significant expansion down. Now, the closer we get to like October 22nd, especially the closer we get to October 31st, we are getting to a point where the odds are increasing quite high of seeing significant expansion to the downside. We don't quite have it there yet. When looking at this near-term group, we're not quite there yet. We have not even seen stage 1 expansion down again yet in the weekly. Red and blue both are below yellow level 50 right here. Yet we did not get expansion down right here. We continue to get more contraction. We're still getting contraction. Now, will we get expansion down again in this weekly? Because normally you should get it stage 1 expansion down when the red and blue went below yellow level 50 again, but we didn't get it. Well, the green goes down again. The red and blue are at least below level 40. Still no expansion down. Now here comes the green coming up. The only chance for us to get expansion down again is for this green to go down again. Will the next 1 week candle end up with the green all of a sudden coming down? It's possible. Maybe the next weekly candle after that begins when? Monday, October 31st. Watch out for Monday, October 31st. If we haven't begun to do anything by October 22nd, October 24th, let's say October 24th, that's when the next weekly candle begins. Either the next weekly candle, October 24th, or especially the next weekly candle, October 31st. If we're going to go down with a sign of weakness, which I believe we will, it may not occur until sometime between October 24th and how many days are in a weekly candle? 7. So Monday the 31st, Tuesday, November 1st, Wednesday, November 2nd, November 3rd, November 4th, November 5th, November 6th is 7 days. So then the next candle after that, November 7th, and you see right there, Monday, 07 November 2022 at the very bottom of the chart. Definitely somewhere between the 31st to the 7th, somewhere within the 7 days of the next weekly candle that begins on October 31st, not the very next one that begins on October 24th. Could we begin something then? Yeah, it's possible, But if nothing began as far as any significant move to the downside yet right there, may have to wait until the next weekly candle that begins on November 7th. When's the U.S. election? November 8th. They may want to keep this market up, y'all. Even the S&P 500, keep it up because they want votes. They know likely they're not going to get it. So this is the people's ultimatum. If you don't vote for us, we're going to slam this market hard down on you and wreck every single one of you. That's my opinion of what kind of vibe, what they're thinking. The deep state, and they know they're going down, so they're going to bring everybody down with them for the hell of it. That's when they could be dumping everything. So we may have to wait until the weekly candle begins on November 7th before we see a real significant move to the downside. We'll see. That's just also thinking of it politically, geopolitically, economically, market-wise. But we do see in this short-term group that we have a chance of beginning, especially in this 8-hour, that blue, it's about to get below yellow level 50, maybe the next 8-hour candle, where we may begin to see another little move to the downside. But it may be something like this, where it then comes up again, and it keeps doing that sideways until, let's say, in between October 24th and November 7th. Between October 24th and November 7th, we might continue to see moves like that over and up. Bam, back up. Bam, back up. Until October 24th to November 7th. That is possible. Most certainly is. Because again, look how long we went sideways right here in 2018 within a relatively tight trading range. Each one of these candles being a period of 3 days. I mean, that was pathetic here. Those of y'all who remember this when we're here and everybody was wondering, what are we going to do? At the time, I was thinking we were going to begin going up. Again, if I knew then what I knew now, I would have known we are not going up. Period. Because I wasn't really using higher time frames then like I use now. But yeah, we are subject to still continue going sideways here for a while up to this is a 3-day candle that begins November 7th. Sometime during that candle, that's when phase E, that may be when we begin to see a sign of weakness to the downside that could come down to the 0.5 fib retrace, maybe the 0.6 fib retrace, maybe just shy of that 0 fib retrace and hit this negative 1.618 diagonal fib, diagonal trend line. That would be around 11 something. 10 something to 11 something. It depends on where it hit it, where it came down to. But we don't know what we don't know until we know it. Right now, we have to say, based on what we're seeing in the indicators, though, we are more risk going down than going up. We have yet to see any signal, in my opinion, of showing that we will see a reversal to the upside for a sustained period of time. We have yet to see that. We are at more risk still of going down than going up. Therefore, I have to conclude that we are likely still in distribution, and seeing how we are currently in phase D as in delta of distribution, we're likely to see this distribution follow through all the way to the end, even into phase E. If we don't see a sign of weakness, phase E, that would have meant this was not our backup last point of support. This was simply a last point of support. Just like here, this was the last point of support. This was the last point of support. All of this, our backup last point of support, before then going up with a sign of strength, transitioning into phase E. That's if we do not get a sign of weakness in phase E. If we reject a phase E, that means we rejected full-fledged distribution. We did not go through it all the way to the end from phase A to phase E. But I'm still leaning towards distribution. That's why you see that note right here. It's possible for phase E of distribution to be rejected with accumulation, phases A, B, and C, followed by a sign of strength. However, I'm still leaning toward continued distribution, that we're going to see a sign of weakness in phase E. It's just a matter of time. How much time? Well, it could begin sometime between October 24th and November 7th. That's my opinion. Let's pull up S&P 500. Immediate group, short-term group, near-term group, mid-term group, long-term group, macro group, super macro group. This is about where I think we could be coming to next with our next sign of weakness, around 3,000. There's 0.236 fib retrace at 3,021 within proximity of this. And as far as Wyckoff method, if you watch the live stream before this, you'd see like when we came down here, we closed below the lower boundary of this preliminary supply range. When we do that, now that's a sign of weakness. So we did that. We have a sign of weakness. However, is that sign of weakness done yet? Well, we don't know what we don't know until we know it. If this is our sign of weakness, that should be followed by an upthrust, followed by a higher low, followed by an upthrust last point of supply event. Did we get a higher low followed by an upthrust last point of supply event? No, we came down to a lower low. Therefore, that sign of weakness was not done yet. This was simply a last point of supply before falling down further, where our sign of weakness continued. All right, will it continue to continue? Well, let's see. A sign of weakness should be followed by an upthrust, followed by a higher low. We got the higher low, followed by an upthrust last point of supply event, or weak buying pressure last point of supply event. In this case, it was upthrust last point of supply event. We got that. All right, so yes, this was our sign of weakness in phase D as in delta. That's followed by an upthrust, followed by a higher low, followed by an upthrust last point of supply event. Now it should begin to come back down again with multiple last point of supply events. Now if we then close below this wick, and we just close below it, if we close below that wick, hey, this might be a sign of weakness. We might be beginning a sign of weakness here. It's possible. Now, the question is this sign of weakness done yet? Right now, the way it reacted, I think this is another LPS, last point of supply. This is another last point of supply event before then really coming down and closing below here with a little bit more authority. Then our sign of weakness has begun, and it may come down like to about right here. And you say, well, is this sign of weakness done yet? Well, that could be similar to where we came down here, not quite down to this fib retrace, the 0.146 Fib retrace, we didn't quite come down to it. Yeah, this is a sign of weakness, but we didn't come down to this fib retrace level yet, so this sign of weakness may not be done yet. Well, we'll know when we get an up thrust followed by a higher low, but we didn't get a higher low. We got a lower low. So then our sign of weakness wasn't done yet. It was done here. It's the same thing here. You know, that's what we're waiting on to see. When it's looking like our sign of weakness is trying to begin here, but this could just be a last point of supply. Here is what I'm thinking now. That's what I'm leaning more towards now. Why? Mainly because of what's going on politically and geopolitically. That's why. Again, I believe the deep state, all the black hats, they don't want to put the market down yet because they want to try to get votes. They know that more and more people, Democrat or Republican, it doesn't matter, they're all affected the same, especially when it comes to economics, to finances. If everybody's hurting, everybody, Democrats, Republicans, and Independents, everybody, then they're less likely to vote for the Democrats that in my opinion are in league with the deep state that's funded by central banks. But hey, there's also Republicans that are funded by central banks through the deep state. They have dirt on many of them. That's how they're able to get them to do what they want them to do. But that's going to change soon, in my opinion. We're getting close. We're getting close. But in my opinion, that's what they're waiting on. Then I think all hell's going to break loose either just right before the election to try to even stop an election. That's possible. But if they see that they won't be able to cheat, if they see they won't be able to cheat in this election, they somehow are convinced of that, they won't be able to cheat to win, then we might see it occur before the election. In other words, sometime between October 24th and October 31st, not going all the way to the weekly candle that begins November 7th. Then sometime during that weekly candle that began on 7th, we have the election on the 8th. And then here we are on the 9th where wham, then it slams down. Maybe they think they can still cheat on it, but if they determine that no, we won't be able to cheat, it's time, we see we're about to go down, it's time to break all hell loose, where you're going to see a bunch of crap going down. I'm talking about socially. You're going to see a lot of crap going on, which is also going to affect the markets, the financials and all that too. We are getting close, y'all. And to me, even geopolitical points to sign of weakness in the near future. Not a reversal to the upside. What any kind of good news is out there anywhere to say that not just the U.S. economy, but the world economy is about to turn to the upside for a long extended period of time for a new bull trend again? I don't see any of that anywhere, especially with all these fiat currencies coming to their end. Many of them beginning to hyperinflate. Turkey, the Turkish lira, for example. There's many fiat currencies that are failing now. We're starting to see it. The entire public are seeing it in many countries. They're rising up. They're starting to wake up. We need to keep spreading the word and wake up more, y'all. These central banks and their scam is really what's funded all this, what's bribed all these politicians. But it's not just them. It's also the big pharmaceuticals, the big tech companies and all. But who bribe the pharmaceuticals and the big tech companies? Do y'all know Rothschild started pharmaceuticals? Don't just go by my word. Research it. You'll see what I'm saying. They have control of for the most part, of the medical industry, including the pharmaceuticals. But we're going to see a sign of weakness here pretty soon, in my opinion. We're getting closer and closer. Now, where could we be falling to for Bitcoin? Of course, I have my range here between 14,677 this 0.5 fib. That would put us somewhere around this orange diagonal trend line. But we could come down to, and that orange is the negative 1.5 diagonal trend. The green is the negative 1.618 diagonal fib trend line. You know, we could come down to that, which horizontally would be near our 0.618 fib retrace at 10,186. So 14,677 to 10,186. We could come down that low. You know, that's possible. It certainly is possible. But I think we're getting pretty close to another sign of weakness. But when I say another, this will be our first sign of weakness in phase E, where we transition from phase D into phase E. Wow, it looks like we've slowly gotten less over time, but let's go back to the S&P 500. When I say we've gotten less over time, I'm talking about viewers. We were up to around 34 at one point, but now we're back down to like 17. I personally believe I'm providing some excellent information, especially when it regards how to use the indicators. Here, what are we looking for? You know, when you tell me we're going to do something, don't just draw some lines and draw some diagonal support and trend levels and horizontal support and resistance levels, along with some fib, retrace, or extension levels. Yeah, and you say, well, we could come down to this fib or this diagonal or this horizontal support or resistance level, but we could go up to, you know, sometimes you'll see an up arrow and then a down arrow saying we could go up or down, and they draw some support and resistance, diagonal and horizontal support and resistance levels. But that's why I like the indicators. You know, I would like to see them at least, let's say, use the MACD, at least that. Not only that, but hey, let's look at multiple time frames, not just a single time frame. Don't just show me the weekly, or don't just show me the daily. Be surprised how much information you can learn, even if you're not using these indicators. If you're using other indicators, the MACD or whatever, use it in multiple time frames to get an idea of what's going on in the immediate term, in the short term, near term, mid-term, long-term, macro, super macro. You know, try to get a good picture. And of course, it depends on what kind of trading that you're doing. Example here in the 5-day for the S&P 500. This red, is it ready to go up above white level 30? No. Y'all see this white lower B band synonymous with white level 30? You see now why, you know, the red is the price mean. The red line, that's the price mean. Well, the price mean, fair market value of the price or the index for the S&P 500, all this time when that red was below white level 30, that means all that time the price action is remaining below that white lower B band. We're going to have a hard time going up from that white lower B band to the basis, because this red line is not ready to go up above, up from white level 30 towards yellow level 50, because that's why we're not seeing the price action ready to go up from the white lower to the basis, because the red's not ready to go up from the white lower to the yellow basis. White level 30, yellow level 50. I call this white lower and yellow basis because it's synonymous with that up here. That's the reason for the color coordination. You know, this is why this white lower B band is still acting as resistance, y'all. This is helpful information to know. This is the 5-day time frame. If you were scalping using the short-term group, anytime you opened a long position in that short-term group during this 5-day period or during this 5-day period, you know as far as closing that long position, you need to seriously be thinking about closing that long position when that price starts getting up near that white lower B band in that 5-day time frame. That's just to give you an example of paying attention to detail, looking at higher time frames. Even though you're using the short-term group to open and close positions, hey, don't ignore those higher time frames to give you more of an idea of where the price action could be going. But note this. This is the 5-day. It's not the daily. It's not the weekly. It's the 5-day. Learn all you can to determine where your ceiling of resistance is, where your floor of support is. If you're open to short and it's going down, where's my floor of support? Just as whenever you open a long for when it's going up, where is my ceiling of resistance? But that's where paying attention to that, especially that red line. Where is it? Where could it be going? When could I be going up from that white lower B band, or when could I be going down from that white lower B band, based on what that red line's doing? Not only in this particular time frame, but also in this time frame, this lower, or this time frame that's higher than the one I'm looking at. Learn all you can, gather all there is on the subject. Then you will be able to rightly divide the truth, to see the truth. Or let's say you have increased odds of rightly dividing it whenever you learn everything there is on it, not just in this time frame, but everything above it and everything below it, to get an idea of where we could be going, whether up or down. And the B bands are let us know where we could go up to or where we could go down to. For example, going up to the white upper B band I mentioned earlier in the stream. Not only when we don't want just the red getting above white level 30, but also the blue above white level 30. That's going to increase the odds of going up from the basis to the white aqua upper. Most certainly is. But like let me find a good example. Red got above white level 30. That increases the odds to go to the basis, but the blue also gets above white level 30. That increases the odds of going up from the basis to the white aqua upper. You see that happen over and over again all the time, as far as letting you know if you were using, this is the 5-day time frame. If you were swing trading, using the 12-hour, 24-hour, probably also using the 6-hour, maybe even the 3-hour for your entry. But then for exit or to close, you're paying attention to your ceiling of resistance for a long, or your floor of support for a short. In this case, floor of support, blue's below white level 70, but red's not below white level 70 right here. When it got below it right here, we had already went down close to the white lower B band, but not quite. The red and blue turned down, and they're both below white level 70. That definitely increases the odds of going down, not just to the basis, but also to the white aqua lower, for a short. And when the red and blue get below level 50, we could see stage 1 expansion down. They get below white level 30, we could see stage 2 expansion down. The B bands expanded, opened up. We went down a little bit, but then, we had a bear trap right here that ended up being a bull trap. We call this a bear rally, where it then went down again. Blue below white level 30. Once the red got below white level 30, wham! Stage 2 expansion down. We started stage 2 expansion down, but then it got rejected. Red came back up above white level 30. We had another attempt again of a significant move down, or stage 2 expansion down, and we got it. All right, now when we went down, the red went down below white level 30. Do not assume you're immediately going to break out above, go up from the white lower B band towards the basis and the white aqua upper and keep going up. Pay attention to that red line. When it kept going down, did it look like it was going to go up above white level 30 when we were here? No, it took some time for the red to get ready to go up above white lower B band, white level 30. so that we can go up from white lower B band, not just to the basis, because now that blue's is on the verge of going up above white level 30. When it does, and also note the red, it's on the verge of going up above yellow level 50, meaning we can go up from yellow B band basis to where? Towards the white aqua upper, because the blue is also above white level 30. That's why we have increased odds of going to the white aqua upper then, especially when the red gets above yellow level 50. If it's on the verge of going above yellow level 50, if your blue line is way down here around level 20 and that red's about to go above level 50, you may just be going sideways there at the basis for a while, and it may end up that the white aqua upper B bands come down to meet your price action that went sideways there, instead of you going up to meet the B bands there. In this case, we went up to meet the B bands instead of just going sideways, letting the B bands meet us. So I say again, just like here, look at our red line. Does it look like it's about to go up above white level 30 anytime soon to increase the odds of us going up from the white lower B band to the basis? No. Therefore, our white lower B band is still acting as resistance. If we go up to that basis all of a sudden in this 3-day time frame, be careful. That's likely a bull trap. If we all of a sudden go up to that basis, especially the white aqua upper, and that red is way down here, not even ready to go above the white level 30, much less yellow level 50, to justify us going up from the basis to the white aqua upper, yet we just all of a sudden, wham, went up. Be careful. That is a bull trap. Most certainly is. At least 95% chance that's a bull trap. It's feasting to come right back down, where you'd be getting ready to do a short end. That doesn't happen very often. I've seen it happen, but that doesn't happen very often in this 5-day time frame. But again, don't just get stuck on the daily and then the weekly, maybe the 2-week, maybe the monthly. Even look at odd time frames to gather all the information you can to determine where your ceiling of resistance is for a long and where your floor of support is for a short. If you open a short, where are we going down to? Where we would have support there, where I'd seriously want to consider closing my short. Alright, stay put. Okay. I was reading the chat there for a moment. This is the 24-hour. So again, like I said, right now, this red and blue's still above white level 30 here, red's above white level 30 here in the 2-day. This was the 3-day. Red and blue got above white level 30. They both got above white level 30. That increases the odds to go to the white aqua upper, which that was the case. Are we going to get expansion up? Well, that depends if the red and the blue can get above yellow level 50 in the 24-hour. If they can, we can go up too. We can go up to where? Where's our ceiling of resistance if we went up? We see this red's above white level 30 here in the 2-day. Is this blue ready to get above white level 30? No. So if we did go up the basis, that's it. That blue's not on the verge of going above white level 30 to increase the odds of going up from the basis to the white aqua upper. So right now, if we did go up, that basis is it. That basis is currently 3,800. If we did go up, that's it. That's our ceiling of resistance right now. When looking at it for the near term, that's our ceiling of resistance. Now, if we all of a sudden went up, not just to the basis, but to the white aqua upper in that 2-day time frame, to the white aqua upper, and that blue is nowhere near on the verge of going above white level 30, we're coming right back down. We're coming right back down. We're overextended up in that case. The indicators do not support us going up to the white aqua upper and staying up there. Because that blue is, if it's just kind of going sideways, not even on the verge yet of going above white level 30 in that 2-day. But right now, I'd say this B-band basis, yellow B-band basis in the 2-day, that's currently at 3806. That's currently our ceiling of resistance. Now, if we did see a shoot up all of a sudden,
in that 2-day time frame. Don't be surprised if you see a wick there and it come back down and close right around the basis. You know, I'm talking about the next 2-day candle. If we did that and it closed right around the basis, why a wick up there and then you see it close here? Because that next candle, if that red gets up here at or near yellow level 50, I can see the price action closing there. See, right now the red is at white yellow, halfway between white and yellow, halfway between white lower B band and yellow B band basis. We're pretty much staying pretty close to where the red, the price mean, is at the moment. But if we want to go up from the basis, or let's say it this way, if we want to have increased odds, implying less risk because of increased odds of going up from the basis to the white aqua upper, if we want to have increased odds of that occurring, the red and the blue need to get above white level 30 in order to justify taking that risk. That's just as an example of how you would measure your risk. When do you want to measure, or when do you want to take a risk, actually execute, initiate a risk? Well, it depends on when you're measuring your odds. Are the odds low or high to go not only just to this basis but also to that white aqua upper? In my opinion, you know, when opening a long position, you know, first off, I want to see that it has a chance of moving pretty good to the upside. You know, where could it go up to? Well, that's, how do we determine where it could go up to? Well, it depends on where the red and the blue are at that time. All right, but yeah, for right now, the S&P 500, I'm saying the 3,800 is definitely ceiling of resistance. You know, we're going, if we go up 3,800. Now, if we go up above 3,800, be very, very, very careful. That is a bull trap. That is a bull. Do not assume we're mooning there. No. That's just, in my opinion, if looking at it politically and economically, or just market-wise, that's them trying to make the market look good before the election. Because all hell's going to break loose after the election, but it could break loose before the election. Like I mentioned earlier, they see that they have no chance of winning because they see their odds have diminished of cheating and succeeding in their cheat. Be like, no, it's time. I see that we are at serious threat of going down. So let's not only try to postpone this election due to social events going on with all hell chaos going on. Hell, let's not just do that. Let's maybe shut off the power. But now we're getting in tinfoil hat, and I'm not going to go there. I just see so many things lining up, y'all. There's nothing good lining up for an extended period of upward pressure. It's not. I just see a pause before the storm. That's my opinion. Yeah, you might see a rally, but that's a bear rally. Also referred to as a bull trap. You know, if we see a rally, in my opinion, that's a bear rally. It's a bull trap. And 3,800 is pretty good ceiling of resistance. We go higher than 3,800 points on the S&P 500. Be careful. That is a bull trap in the making. Most certainly is. That's my opinion. You see the 2-week time frame. Blue's already below white level 30. The next 2-week candle, that red's going to be below white level 30. Look out. Look out. Hey, it might, that green could come up the next 2-week candle. You see it, the green's trying to come up in the 8-day, in the 9-day, See, the blue's already below white level 30 in the 9-day, but the red's not below it. Hey, the red looks like it's about to get below it. However, the only way to get stage 2 expansion down, that green can't be coming up. That green has to be going down with the red line below white level 30. Then you can get expansion down. All right, so right now it looks like expansion. Look at the white lower B band, 3771, just shy of 3800. And right now it's acting like we may hang out around with 3800 being the ceiling of resistance, 3771, being the ceiling of resistance now, because we need time for that red to turn back up, to go up from the white lower towards the yellow B band basis, to go up from the white lower to the yellow B band basis, because the red is going up from the white level 30 towards the yellow level 50. That would take time to play out in this 9-day time frame. Each candle a period of 9 days. In the 8-day, don't we see the white lower B band as a ceiling of resistance? Because are you anticipating this red all of a sudden just making a U-turn, going up all of a sudden to the moon or anything like that anytime soon in that 8-day? It doesn't look like it to me. 3759, might as well say 3760 is a ceiling of resistance in the 8-day, and it doesn't look like it's going to go up from that white lower to the basis in that 8-day anytime soon. But if we did, that is a bull trap in the making. When looking at it that way with the indicators, that is a bull trap in the making. Well, what could that be as far as what event could that be when using Wyckoff method 2.0? What event could that be? If we went up to 3800 or higher, I told you that's a bull trap in the making. What event could that be? A last point of supply event. Just like here, we closed below our lower boundary of our preliminary supply range. We closed below it. Hey, looks like we're beginning a sign of weakness. Then we come down and we began going up. Then we say, well, that sign of weakness wasn't much of one. But it may not be done yet, because a sign of weakness should be followed by an upthrust. We got it. Followed by a higher low, but we got a lower low. Since we got a lower low, that was not an upthrust. That was a last point of supply event followed by sign of weakness that was continuing. Will it continue to continue? Well, it went up with an upthrust followed by a higher low, followed by an upthrust last point of supply event. Okay, yeah, there we go. There was a sign of weakness. This followed up with its proper events that should occur before we have a chance of attempting another sign of weakness. Again, transition from phase D into phase E. All right now, I'm saying if we go up to around 3,800 or a little higher, be careful. That's a bull trap in the making, in my opinion. If we do that, that's a last point of supply event before continuing with a sign of weakness. Just like here. Just like right here, the last point of supply event before continuing with our sign of weakness. We could, if we go up to 3,800 or higher, as far as what event could that be in our Wyckoff distribution schematic, that could be a last point of supply event in phase E, just before continuing down with a sign of weakness, because the sign of weakness is not done yet. Yeah, we've closed below the lower boundary here, but we haven't stopped going down yet. And I do not see anything in the indicators to show us anytime soon that this is a reversal to a new bull trend. Far from it. Far from it, in my opinion. When looking at it analytically, when using Wyckoff method, when I say analytically, that's with Phoenix Ascending and Badass B-Bands and Stochastic RSI. When looking at it analytically that way, but also when using Wyckoff method, I just don't see that yet. Normally we should be making a transition from phase D as in Delta to phase E as in Echo now. And we're slowly making that transition from phase D into phase E. This is the 3-day time frame, each candle being a period of 3 days. We're still in a transition period from phase D into phase E, working on our sign of weakness. But even for it may be sometime between October 22nd and November 7th. Well, the election is November 8th, so the weekly candle that begins on November 7th, I'm not saying it's going down that day. No, that's when that last weekly candle that begins November 7th, as far as the range, which weekly candle could we begin to go down significantly with a sign of weakness? It could end up being that weekly candle that begins November 7th, like for Bitcoin, I think it's November 6th. No, it's November 7th. Monday, November 7th. Monday, November 7th, the weekly candle for S&P 500 as well. So yeah, that green may be coming up now, but be careful once that green begins going down. Be careful. Y'all also see we wick above the white lower B band in the weekly, don't we? We've wicked above it a couple of times, but we would keep seeing a pullback closing below the white lower B band. Why? Look where the red line is. It's below the white level 30. That's why we have increased odds of closing below the white lower B band, even though we wick above it. We're not ready to go up from that white lower B band to the basis or higher. We're not ready to do any of that because the red's not even showing itself as being on the verge of going up from white level 30, much less going up from yellow level 50 to imply that we can go up from yellow B band basis to the white aqua upper. Long time from that. Yeah, we're currently going up at the moment. Where could we go up to? Maybe around 3,800. Could be higher. We go higher than 3,800. Be super careful, y'all. This is a bull trap in the making. We do that. That's a bull trap in the making. They'll want to liquidate some shorts there and then short it themselves by that move up. So yes, we do see potential move to the upside, but we still have a hard time the 4-day getting above white lower B band because the red day or the red line is having a hard time getting above white level 30 in the 4-day. The thing to watch is this 2-day, because that blue line is nowhere near white level 30. Why am I emphasizing this? Yeah, the red's above white level 30. Yeah, we could go up to the B-band basis, currently at 3,800. But do we have increased odds of going up from 3,800, the yellow B-band basis, to the white aqua upper? Not until this blue line gets on the verge of going above white level 30, then we have increased odds of that occurring. So, again, to me, if we start going up, that's not a reversal. That's a trap. That's what that is. That's a bull trap, in my opinion. Based on the indicators and based on the fact of knowing what events should occur within each phase of a Wyckoff accumulation, or in this case, distribution. Knowing what can occur in each, as far as events go, in each phase of Wyckoff distribution. All right, I think I'm probably going to call this stream quits, y'all, because I'm smelling my wife cooking. I don't know what she's cooking up there, but it smells good. I am kind of getting hungry. I have not had anything to eat yet. I woke up at around 11:35. I went to sleep at around 3:30 this morning. Woke up at about 11:30 this morning. Had about 8 hours sleep. And I have not eaten a thing yet. I've had some coffee, but I haven't eaten anything yet. I need to get me a bite to eat. I just thought I should provide an update for Bitcoin and Cardano, and a little bit with the S&P 500 as well. I wanted to go ahead and do that. Appreciate y'all having joined the stream. Again, if you don't mind clicking that like button, I certainly would appreciate it. That really helps me out. That's just a way of, you might say, reward me for the time that I'm investing with y'all. If you don't mind clicking that like button, I'd appreciate it. If you want to share the link of the stream with others in other social media, whether it be Instagram, Telegram, Twitter, whatever, I appreciate that as well. That helps me out as well. But yeah, we're going to go and call the stream it for now. Of course, feel free to rewind, just to hammer in your mind some stuff. What target was he saying? When could we potentially go to that? Rewind the video, soak up all you can. There's still a lot more. There's still more that yes, I'm holding back, but hey, I have a right to do that. I most certainly do. People want to call me an asshole for holding back. I'm sorry. But I also believe in capitalism. And I'm not going to go there again on capitalism. Listen to my previous stream on that. As far as how everyone has value. Everyone has value. Just some have more value than others. But that's it with the stream, y'all. I'm getting hungry. My stomach's growling. I smell that food up there cooking. Again, thanks again for joining us on the stream. And I look forward to seeing y'all, talking to y'all again later in the future. They say that was fantastic material. Appreciate that. Yeah. Peace out. Cheers. Cheers. Stay awesome, everyone. Let me stop the stream.